Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, July 30th, 2026. Let's take a look at the chart. Start with the big picture. A big sell-off last week. Needless to say, we settled below this 16-month channel bottom at 373.37, which indicated, and we almost reached that actually in the scope of a single week, the 300.90 descending channel bottom in combination with 291.81. 291.81 I can show you is just a wave count, A minus B minus C. It's the same sort of framework as the channel bottom itself. It is a narrowing range, 300.90 dropping weekly, 291.81 is a static level, of course. We also have in the mix 299.29, which is very close to 300.90. So this range, about 9 points wide, may well absorb selling, through August. And from here, we can stabilize and round up potentially into the 370s again by the end of August. Now, on that scenario, on the way up, we do have this former channel bottom at 354.36 that has a lot to say about whether this market's going to actually continue all the way up into the low 370s. I think this level can be sold aggressively if tested over the next few weeks. But if you're a 2 to 3 week, 3 to 5 week swing trader, you're bottom picking, if you will, the 291.81 to 300.90 region. It depends on your time horizon, of course. If you're a 3 to 5 week swing trader, this area is not to be ignored, 291.81 to 300.90, because from here we can spring back essentially into this 350s resistance. On the way up, I have 328.10. Not going to see that today, but this is still, once again, our 3 to 5 day swing trade. You could be long now. Now, I know I hate buying into ranges. How should I frame this? If you're all in at 300.90 and your stop is now below 291.81, that might be a stretch for you, depending on your account size and how loaded up you are on Tesla, right? Or maybe you scale into a long position. That's what I do in this situation. I buy some at 300.90, buy more at 291.81, and then I've got a stop loss below 291.81 that represents no more than 2% of my trading capital. So that is entirely up to you. We don't really get into the risk management aspect, but these are classic rules that the successful trading community has used for years. Let's take a look at the upside, 316.86. I don't know if we'll see that today either, but we certainly might, and that is that longer-term trend line on the weekly chart I can show here in red. We certainly opened below it this week. It's held for all intents and purposes and has yielded this 300.90 channel bottom, our objective, I should say 3 to 5 week objective following the settlement below 373.37 last week. That took all of about 3 to 5 hours, really. So yes, once again, bottom picking, 3 to 5 week swing traders, 3 to 5 day swing traders, and just day traders themselves. Day traders could see 316.86 today. That is that long-term trend line on the daily chart. 3 to 5 week swing traders could see 328. 3 to 5 day swing traders could see 328.10, and 2 to 3 week swing traders could see 354.36. These are the several points to the upside that represent those time frames. So that covers the upside pretty well. I'll say that if we close today above 316.86, tomorrow Friday we test 328.10, where we could top out into next week and fall back into the 290s. Closing above 328.10 does represent a 3 to 5 day swing trade unto itself to 354.36, where we could top out through August and fall away back again into the 290s within 2 or 3 to 5 weeks. Closing above 354.36 sets up 373.37 within a matter of days, and this is a level that could contain selling through the rest of the year. I do need to mention, as I have many, many times, and I did when we did get the sell signal last week below 373.37, that our ultimate objective may well be 227.47. And I've said that you can actually play that, perhaps reaching for 230 strike out of the money puts. Volatility is very high right now, so it's not a great environment for reaching for puts, unless, of course, you get immediate gratification. The market closes this week, Friday, tomorrow, below 291.81, and we continue to cascade south by the end of August to 227.47. And you look like a genius buying those expensive puts because they will continue to open up. But if we trade sideways here for a week or two, or perhaps turn up into the 350s, as I said earlier, within 2 or 3 weeks, this then becomes a more appropriate environment for buying options. In any event, Closing tomorrow, the week itself below 291.81 does set up 271 even by the end of next week. And I think by the end of August, 277.47 is likely where we could bottom out quite easily through the rest of the year. 277.47, I'm going to back up from here and just show you the big picture. You could call this the beginning of a wide zone down to 186.30, 6-year channel support that could contain selling not only through the rest of the year, but possibly through the rest of the decade. This is a significant long-term support area for Tesla, and I do think it's in reach, the 227.47 level, over the next, few months, maybe few weeks if we close tomorrow below 291.81. I think I've said it all. I might not have said it well, but I've said it all, and I am going to leave it at that for Thursday's Daily Tesla Report, and you have a great day.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity.
Start your 2-week free trial and trade with clarity from day one.